Welcome to today's Indian stock market analysis for 18th August 2026. Here are the closing levels. Nifty 50 settled at 24,154.90, down 133 points or 0.55%. Sensex closed at 77,235, lower by 493 points or 0.63%. Bank Nifty ended at 57,262, down 235 points or 0.41%. Nifty completed its sixth consecutive losing session. Market breadth was weak, with only 10 Nifty stocks closing in the green. Why did the market fall? The primary trigger was geopolitics and crude oil. The temporary US-Iran ceasefire expired without an extension. Iran hardened its stance while the United States ruled out any prolongation. This pushed Brent crude above $91 per barrel and raised risks around the Strait of Hormuz. Rising U.S. bond yields added to the pressure. The 10-year yield stayed near 4.73%, and longer end yields hit multi-decade highs, making emerging markets less attractive. IT stocks faced heavy selling. Nifty IT fell nearly 2% as investors worried that high global interest rates could slow technology spending. Additional pressure came from the realty sector, which declined around 1.4%. The Indian rupee weakened to 95.68 against the US dollar, raising the cost of oil imports. Earlier sessions had seen heavy foreign institutional selling, though on 18th August, FIIs turned net buyers of about 1,652 crore rupees, while DIIs bought 2,579 crore rupees. Global cues also remained soft after Wall Street closed lower. Now looking at key technical levels. For Nifty 50, strong support lies between 24,100 and 24,000. A break below this zone can open the path towards 23,850. On the upside, resistance is seen at 24,250 to 24,300, followed by 24,360 to 24,400. For Bank Nifty, support is placed at 57,100 to 57,000 and then 56,800 to 56,500. Resistance stands at 57,500 to 57,600 and higher at 57,750 to 58,000. Commodities and currency continued to influence sentiment. Brent crude remained elevated near $91.5. Gold on MCX softened to around 1,55,000 rupees on profit booking. Silver declined more sharply near 2,35,000. The weaker rupee at 95.68 adds further pressure on India's import bill and inflation outlook. Sectoral rotation showed clear risk-off behavior. IT, Realty, PSU banks, FMCG and metals were the main laggards. Relative strength was visible in auto, which gained 0.3%, along with media, healthcare, pharma, and selective oil and gas stocks. Looking ahead to 19th August, the bias remains cautious to mildly negative. Traders will closely watch overnight crude moves and any fresh headlines from West Asia. Nifty needs to defend the 24,000 to 24,100 support zone for a meaningful bounce. A clean reclaim of 24,300 would improve sentiment. Bank Nifty is expected to stay relatively steadier unless the 57,000 level breaks. Domestic institutional buying continues to provide a solid floor while India VIX remains low. Key takeaways. Near-term outlook is corrective and range-bound with oil and geopolitics as the main overhang. Prefer quality large caps and selective domestic themes such as auto, healthcare, and financials on dips. Exercise caution on IT and high beta names until crude stabilizes. The 24,000 support and 24,300 resistance on Nifty will decide the next directional move. Strong DII support remains a positive structural factor for the market. Thank you for watching. Stay informed and trade carefully.